A stock market filled with weakness has finally been exposed. Deep within the obvious signs lies more crucial details which are not being exposed in the mainstream propaganda media. Crude oil continues to decline for various reasons. Suddenly, we'll feel the tremors of a collapse underneath our feet as it swallows everything whole. You came here for the truth, so let me unveil that for you. Today we will discuss the stock market plunging at 1,500 points. This is very significant. Now, this is not the first day that this type of drop has occurred. Have no fear, because the Plunge production team will come in and save the day. Let's begin with this Wall Street Journal article. Global stocks plunge driven by the heightened concern about global growth and the confidence in the willingness or ability of central banks to boost their economies. That's right, not for the actual economy to become stronger, but for the central bank to step in and print money. That's all they're saying. That's what the traders, the algorithms are worried about. The concern is the outlook for inflation, which in small doses is crucial to a healthier economy. That's right, because there's never been a period in history where deflation has actually been beneficial, and which monetary policymakers around the world have failed to accelerate. That's right, printing money. You're not printing enough money, therefore the economy can't rise. Another sharp fall in oil prices and weak consumer price data in the U.S. on Wednesday gave traders fresh reasons to doubt what already were dismal expectations for the year. Of course, we knew 2016 wouldn't be a good year. I'm sure the majority of the people here watching this video do agree with me, but now it's coming into a reality. The Dow Jones fell by more than 500 points before rebounding close down to 249 points. That's extending a route that has left the blue chip index off 9.5% this year. Very significant. And also you have the UK's index sank into a bear market, as well as Japan's down 20% from a recent high. These are bear markets. These are recessions that are occurring in different parts of the world. Eventually the US will have to admit the same. Before I forget, I would also like to note that Canada, the central bank, the Bank of Canada, decided not to change their benchmark interest rate, leaving it at 0.5%. Significant information, I believe, so we'll keep an eye on that. This is crude oil since approximately 2008 to present day. As you can see, peaked out at about $140 a barrel. Then it dropped down significantly to approximately $40 a barrel. Then it picks up as everything became oh so good again. But you can see that it trades between, let's just say, for argument's sake, $80 and $100 for a few years. So it's within that range, up and down, a little volatile here. But within definitely a higher range, doesn't really make it up too much higher than $100 at any given point. Then it drops down from that $100 mark to where we are today within the span of about, let's say, a year and a half. What happened in between it riding within that $80 to $100 mark and then all of a sudden dropping off within a year and a half? Was it the glut, the oversupply of oil? What happened in those few years? Was there not an oversupply in 2010, in 2011, 12, 13, and then 14? Was there not an oversupply? It's all of a sudden that in the middle of 2014 there's an oversupply? I don't think so. Much more going on here. It's being used as a weapon. Could there be some oversupply? Absolutely. Do they need as much now as they did during the peak at that $140 barrel? You know, I don't have the statistics on that, real true statistics. We can see that they do suggest that really isn't matching up at this time. But at $140 a barrel, was it worth $140 a barrel? Perhaps. But I would have to suggest that this was pushed up higher than where it should have been, just like every other asset. They chase the money, basically chases its way, pushing things way too high, or in certain cases, pushing it way too low. So whether an asset, stocks, or whatever it might be, some sort of paper asset or commodity or futures market, whatever, will be pushed to a level beyond where it should go. This happens every single time before it reverts back down to the median. This always happens. Oil is no different. This is very, very interesting, actually, that oil has become so cheap that the barrel that it sits in is actually significantly more expensive. It looks like it is, in this case here, you can look at the article for yourself, 3 times more expensive. The barrel itself is 3 times more expensive than the oil. That's all I wanted to know from this. And they basically just say, look, Iran coming in is very significant. I don't believe that that's the case. I think there's a lot more going on here, but they're not going to get into the high frequency traders and everything else that is going on at this time. Moving on to this article out of CNN, big banks are cringing as crude oil is crumbling. Firms on Wall Street help bankroll America's energy boom, financing very expensive drilling projects that ended up flooding the world with oil. To some degree, actually very true. Now that the oil glut has caused prices to crash below $30 a barrel, turmoil is rippling through energy industry and souring many of those bad loans. Dozens of oil companies have gone bankrupt, and the ones that haven't are feeling enough financial stress to slash spending and cut tens of thousands of jobs. The last point is what I wanted to note. Tens of thousands of jobs are being cut. What happens when people cannot get their job at this time? Perhaps they're just waiting around. They may seek unemployment insurance. They may have to basically go on the government paychecks. That makes them ultimately dependent. This is the ultimate goal of any government, is to expand in every single avenue, whether that's food stamps, welfare, disability. Every single program wants to increase so that it can grab and swallow up more. Moving on to Apple. The biggest company in the world, Apple falls close to a, quote, freak out level. Apple fans are still defending the stock, calling it a bargain. And you hear this all the time historically whenever a stock begins to decline. And of course, we look at this in the pages of history and it seems so easy. But here we are just talking about it right now. And essentially what they're saying is that don't worry, everything is just fine. I've heard it all before, but it's not Apple that you need to watch. It's not Microsoft. It's not Google, it's not Exxon, it's not any of these individual companies. You need to look at what's going on deeper. For the most part, and I've talked about this 1,000 times before, but for the most part, stocks move in line together. Now today, somehow, commodities, stocks, whether it's paper investment, whether it's the futures markets, whether it's anything else, any other type of investment, all seems to be going together, moving up together, moving down together, stagnating together all at once. Why? Because the real market, the bottom, has fallen out. In my book, I talk about different periods of time, beginning in 1920 up until the financial crisis 2008 and beyond. And one of those chapters is about the 70s. Oil shocked, starting in 1973-74, and then in 79, there were oil shocks of significant shortage. Unrest in the Middle East promoted fear that the precious energy source would not be able to flow toward the West. As a result, oil prices had quadrupled and had further negative effects on the economy. Is this the only reason? Well, this is the most important reason at that time why the price had quadrupled. What I would suggest to you from this, all I'm trying to note, is that the prices can change rapidly on the upside. So because it is at this time under $40 a barrel doesn't mean that it cannot go significantly higher. If we take this to factor this in, if it was at, let's say, $40 a barrel, 3 times that price, and we're looking at the price we had several years ago. So just remember that, keep that in mind, that things can change in an instant. Let's look at this. This is actually George Soros talking, quoting, "As she, Merkel, correctly predicted, the EU is on the verge of a collapse. The Greek crisis taught the European authorities the art of muddling through one's crisis after another. This practice is popularly known as kicking the can down the road, although it would be more accurate to describe it as kicking a ball uphill so that it keeps rolling back down." Europe is in trouble. There isn't too much information talking about the economic crisis in Europe, but definitely the euro itself is in big trouble right now. Just wanted to mention that. Now, what is the solution to all of this? How can we ever get out of this? What I would suggest to you is that for the most part, the general public is going to be useless to you and to us. Technology is destroying our inner lives. This article is out of time, talking about how people are basically disconnected. And this is what we have today. This is just an article I'm not going to really get into, but we are definitely disconnected from reality because of, in part, technology. Now, I do believe that technology is amazing. Technology is how we are interacting today, how I post these videos, how you comment on them, how I reply to you, sending emails, videos, and everything else. It's very important. However, what I see is the zombie factor. The zombie factor is absolutely crucial as far as I'm concerned. I did a video about it showing you how the cell phone zombies are plaguing our society. You can see that if you go back in these videos a few backwards. In the last couple of weeks, I did the video if you're interested in checking that out. That's all I'll say for this video. If you found it informative, please give me a thumbs up. And last but not least, if you found the video informative, you will definitely, most certainly, absolutely find my book, The Money GPS, even more informative. If you head over to Amazon, they have a look inside feature, which allows you to flip through the pages of the book and see if you like it. Take care.